Utopia, dystopia, and today's technologies hosted by Johannes, Castner, bringing a global conversation discussing technologies that affect us all.
Hello and welcome. My name is Johannes, and I am the host of this show. Today I am here with Flávio Azevedo, who is the founder at Antler. Antler is the investor backing the world's most driven founders from days zero to greatness. Founded on the belief that people innovating is the key to building a better future, Antler partners with people across 6 continents to launch and to scale high-potential startups that address meaningful opportunities and challenges. Knowing that exceptional founders can come from anywhere with any background, Antler has offices in 25 cities, including Austin, New York, London, Berlin, Stockholm, Bangalore, Jakarta, Singapore, Seoul, Tokyo, and Sydney. Their global community backs people from the beginning with co-founder matching, deep business model validation, initial capital expansion support, and follow-on funding, fueled by a personal passion that goes beyond traditional investing. Antler has helped create and invested in more than 600 startups across a wide range of industries and technologies, with the goals of backing more than 6,000 by 2030. So now I want to begin with the first question for you, Flavio, and this is a little bit of a long one, so please bear with me.
Yeah, so I've recently spoken with two guests. This is Ashish Kumar Singh and Somil Gupta, who Ashish was speaking about the metaverse, in particular in the United Arab Emirates, and how he was involved in it, and also the many use cases that surprised me in some ways, because I myself am a bit of a skeptic of the use of the metaverse. And then he was talking a lot about decentralization in this in our conversation there, which I think is highly related to the blockchain and to crypto. And Somil Gupta was talking about the sharing economy, which again has links to the blockchain and to crypto. And so these two terms, blockchain and crypto, they're being thrown around by all sorts of people, and you hear them being addressed, and it is not always clear for everyone in my audience, I think. At least it's also not completely clear to me until I looked into it more deeply recently. What the difference is between these terms and how they are interlinked, and even the historical profundity of it. How important has it? What kind of potential changes can this actually bring to our society, as well as also where these concepts are rooted in history. So if you could please give us, our listeners and myself, a bit of a lesson with respect to blockchain and cryptocurrencies, and what the difference and the relations between them are.
Okay, so let's starting with it's not because especially with this new space of distributed ledger technology, blockchain and crypto are concepts that are very correlated. But separating the origins, crypto comes from cryptography. That is methods to add privacy and security to information, and that is also something that is very used in this space. The blockchain by itself is a digitalization of something that is very old. That is the ledger books, the old ledger books that were used for accounting. Basically, is a book that registers all the transactions between entities, between parties. In this case, we can also make a bridge with the peer-to-peer economy, where each party can be one peer, and you can, with this distributed ledger technology, it makes you able to transfer value directly between one peer and another, without the need for any middleman, any third party. It's just by the network itself brings the trust for that, and security needed for that transaction. So yeah, more or less on this kind of high level, those two concepts are separated, but they are very correlated on the distributed ledger technology, because it came with Bitcoin. Bitcoin was the first, let's say, use case that correlates this and other areas, because there is a technical part where we can associate the cryptography and the blockchain itself, but it's also an economic part that is very important. Some game theory principles that are also used in Bitcoin. I don't know if maybe this was helpful or not to address your question.
Yeah, so I was also looking for this sort of the ledger versus the money itself. So if you could tell us a bit
Okay.
more about how does it relate to, okay, so how, for example, is Bitcoin different from a dollar?
Okay.
So I
Mhm.
have some good ideas, but it would be nice if it came from you, and if you could give us a bit of a big difference how cryptography came to be involved with money, and it seems to be Bitcoin is a currency, sort of like a dollar in a way.
Mhm.
How do these things come together? How did
Okay.
cryptography suddenly appear on the scene? And then also with the ledger, when did that start? What kind of revolution has that caused in the past when the ledger even was invented? And then if we could know, we've talked about this a little bit, so I know you're a bit knowledgeable in this regard as well. Just give us a bit of an overview for our listeners and for myself to see how it fits into history as a,
Okay.
you know,
So
how it might change us also, how to what degree, what can we expect, how revolutionary is it?
Okay, so that's why I normally I like the term distributed ledger technology, because it can be like a kind of umbrella that packs all these concepts. Because, like I said, the blockchain by itself is just a kind of database of transactions. It registers information on a ledger. It's the ledger that registers the information. The cryptography is to add security and privacy to the information that is stored, and also ownership, to guarantee that there is the authenticity of the person that is writing, that is making that transaction. Now going back and explain why these things were combined in Bitcoin, how it was created. Normally, for me to explain what is Bitcoin is easy to explain what is money. That is something that all humans pursue it, but most of them don't are even aware of what is money in fact, because money was invented, is a technology, and was invented to improve the barter system that existed in the past. Um, Basically, it was a mean to facilitate the transactions. So, you instance, if you have you were a producer of apples, and someone had chickens, and if you want to transact, it was not easy to transact between those two components, because maybe you need to divide them in half or things like that. So it was not easy. So you need to find a technology that would work as an intermediate for that transactions. So basically, money has three main functions: is a unit of account, basically to attribute value to things; a medium of exchange, so that you can transact things between different parties; and also a store of value. So these are the store of value through both time and space. Um, Now comparing Bitcoin with what we call the fiat currency, because the dollar, the British pound, the euro, all of these are fiat currencies, and maybe is another important concept to explain. In the past, one of the first, in the past it was used, how can I say, scarce assets. For instance, salt and seashells and those kind of things that were scarce, for instance, in the mountains, was used as money, because it was something, a kind of tokens that you can exchange due to the rarity. It has value on the places where it was rare. But through time, in the most ancient form of, like I say, sound money. Sound money is a concept from Austrian economics. It was gold. Gold was the, how can I say, is the money that is more, how can I say, that throughout time has kept this value, or even raised this value. But it's not easy to move. It's not easy to transform. Um, but in fact, it's also not easy to, it's not possible to counterfeit money. So it keeps that kind of rarity that also is one of the characteristics that attributes value to money, economic value to money. Um, during many years until 1971, gold was used to back the creation of what we call of currency, of even in coins on paper. Basically, you needed to have X amount of gold in order to produce X amount of paper money or coins or whatever the form you wanted. But in 1971, Richard Nixon basically depegged gold to back the creation of money, to back the value to create money. So basically, not only defaulted on this debt, but it breaks the connection well, of having something real and that has some real value associated to the money that was created. And since then, that's why we call fiat money. It's just money that is based on the trust that people, the user, have on the entities that govern us and that produce that money. One of the issues with that is that since there's no really real value backing that money, you can create print to infinity that money because you are not consuming a resource. There's no limit for that. That's one of the benefits that Bitcoin has. Bitcoin has a finite supply. There can only be 21 million Bitcoins. You cannot print more than that. So that kind of guarantees the scarcity of an asset compared to what we have in fiat. There's no scarcity on the existing monetary system. Well, this is the kind of base. Now there is different points that depend. I don't know which topics you prefer me to go more specific from this kind of overall um, talk between the difference of crypto blockchain and also from fiat to Bitcoin. Okay, I can might try to create what was the reason why Bitcoin was so and it is so successful, even though it is very volatile. So that's why you see it going X amounts of value going up, and then the kind of crash X with 85% of the valuation of the currency. That is also because there is still some lack of liquidity in the market because with more liquidity will reduce the volatility of the asset. But in fact, and going back to that main characteristics of money, in terms of store of value in the last 12 years, Bitcoin has been the best performing asset, and in that period is the best performing asset of the human history. So it's not only during that, but the performance during that period surpasses all other assets that ever existed. Um, One of the things that Bitcoin and why it uses the blockchain, because this concept of ledger is very old. Even some old societies that you the Yap for a citizen from the Yap Island, they used a kind of there was a scarce big rocks round rocks that existed on those islands, and due to that scarcity they create a kind of economic value and ownership. For instance, you if you were owner of that rock, you can have some rights, special rights that people that didn't have could not. And what they do is, since the rock was too big, every time there was a transaction of ownership of that asset, the community will go there, and then you will see someone telling, "Okay, this rock is not mine now; it's from the other person." And then the community itself will be the, how can I say, the trust and the guarantee that was that transaction was real. Um,
Can I just ask you one question? So if something is limited in supply,
mhm.
like land, for example, like we have this example in nature, land, right? Land is limited in supply. But you have an increasing demand on it because more people are in the world, and they or at least it was that way. Now I don't know. In some areas we have decreases of populations, but let me not get lost in this. But the thing is that if you have more dollars chasing the same amount of land, in other words, the land will then become expensive, relatively speaking to other things. I guess this is going on in this example. So artificially, your supply is limited by I don't know, what were you saying, 20,000, 21,000 Bitcoin?
Yeah,
Something like that.
basically it may. There is another thing with Bitcoin because we can see TCP/IP was a protocol for transfer of value of information. Bitcoin is a protocol for the transfer of value, and there are a lot of rules called the consensus rules that govern all the functions and all the features of the Bitcoin system. And one thing it has programmatically is every 40 years there is an event called the halving event. So basically, what it happens is it decreases by half the number of Bitcoins that are created. And by the way, every 10 minutes there is the block time. Every 10 minutes there are new Bitcoins that are minted, and basically they are minted to reward the miners that are protecting the network. And so every 4 years, the amount of those Bitcoins that are created, they decrease in half. So it's uh, deflationary currency, unlike the fiat currency. And now we are seeing all the inflation that is happening. Most of it, or a big part, is related to supply chain issues, but another big part is still related to this continuous printing of money. The British pound is the most ancient fiat currency in circulation now, and it has devalued more than 98% since its inception. Um,
But on the contrary, I mean, wouldn't you also want so Bitcoin, if the demand for Bitcoin becomes such as the dollar is right now, very large, but the amount of Bitcoin never can increase past a certain threshold, and it increases at a slowing schedule, then what that means is that the deflation will be enormous, right? So the increasing value of this asset will continuously increase, right? Pretty much there's no bound on it. And so why is that a particularly so the reason why we have the Federal Reserve Bank is to be able to basically be able to give a bit of slack, and so to allow with a policy intervention with a policy goal in mind, which is to either keep inflation in check or to boost the economy, which some people are against or for, either one of those. But the point is that you have this lever. You have a one-dimensional lever that you can use as a policy instrument. And so you can, in a way, deflate the currency value vis-a-vis to the goods. Goods and services at the end of the day are the true currency. The chickens are what you want, right? You don't want necessarily, but so you're using this currency as if this currency becomes ever increasing in value, you suddenly want to hold on to it more, of course, because so you want to buy less chickens, and you might even starve yourself to death because you're thinking, oh my God, I'm becoming rich. If I eat this chicken, then I will lose this potential value. So it can become quite absurd in a way, and it's not necessarily clear to me why you'd want an ever inflating, or an ever inflating asset. I guess it is inflating relative to other things, right? So why you would want that in particular, and not have that freedom of leverage,
Two
basically.
things. As we can see with the recent things that have been happening with the inflation, having central banks managing that lever has not been very good. Second is a centralized power that only a few people on that central banks they can decide how to use the leverage. So and that kind of creates a kind of not equilibrium. If you look into the kind of game theory, there's not equilibrium between a few people that can decide on what happens to the money to the rest of society that has no power on that and just suffers the consequences for the good and for the bad. But in case of Bitcoin, there and also related because there's 21 million Bitcoins, but one important thing is that the Bitcoin can be divided in many decimal cases. So you don't need, and in the future most transactions won't be, you won't be, and still nowadays most transactions not one entire Bitcoin. There are small units called satoshis that you can transact using those units. There is also kind of second layer because Bitcoin has a base protocol. There are also other applications like Lightning Network that permits that there are to exist many transactions using Bitcoin without real transfers of Bitcoin, and that also the scalability of that. Um,
Mhm.
Bitcoin in the end is an experiment, and we have to look always like
Mhm.
that. So only in 2140, I think, the last bitcoins will be mined. So only by then we'll see. Okay, now there's only, in fact, there is less than 21 million bitcoins because many of those has been the private keys. Have been lost. This is also another very important aspect of bitcoins is the private and public keys, and the self custody of this. Recent cases like FTX is a big example of why it's
Yeah.
important for you to have your own custody of your or assets, unless the ones that you are trading, okay, those ones you need. If you need to have it on exchange, if you don't use decentralized exchanges, because there are already also some solutions for that, you should have the ownership
Mhm.
of your crypto. But in fact, yeah, it's a good thing. It's not continuously deflationary because, yeah, it will be when we reach the 21 million, there will be no more Bitcoin. But the compared, and we should compare to what is the existing solution that we are using, that is fiat money. At least in Bitcoin, there is scarce. You cannot print it indefinitely, and also more than that, you can know in 30 years, 40 years with a small error margin how many Bitcoins will be in existence. In the fiat system, you cannot. In the fiat system, you don't know what will be. Everybody even was yesterday was the Fed raising rates. You don't know in the next month what will be the rates for money in the money supply associated to that. In
Yeah.
Bitcoin, you know that.
But if you were to compare Bitcoin to something that is also in limited supply, which we do have in our regular economy, land that is, you can see some negative effect of this limitation of this resource because newcomers, for example, if I had come to London, let's say 40 years ago, I could have bought the same place that I ended up paying for a lot more, for a lot less, right? And then but now at this level, a lot of people are already priced out of living in London now. They are priced out. They cannot be part of this of this city now because this limitation in supply of land and housing is causing them to be priced out to ever cheaper area. And so something like that could happen in Bitcoin as well, where you're accidentally wealthy because you were the early guy. So why does earliness? So what I'm trying to get to is why should you be rewarded for being early? Why I hear this a lot in the blockchain community, in the cryptocurrency community, that we should reward people for being early.
Well,
But why is that an ethic that we
no,
should reward?
this is not a thing specific to Bitcoin. Once again, we should go to the technology adoption curve. Bitcoin is also a technology. So, and like in every technology, like on the
Of course.
internet, early adopters was the main to enter, was the first to get the knowledge, was the first ones to start building. So they leverage that early
Mm-hmm.
entry into that ecosystem. So this is not a phenomenon specific to Bitcoin. About the scarcity.
But it is built in. It is built in, nevertheless, right? So
It is like
it's
it is a
true. It's not unique.
technology.
It's not unique.
It is a technology. The first is like yeah, it's the first enters to the internet in the first companies. Many of them were destroyed because, in fact, for you, if you entered in the beginning of Bitcoin, you need to truly believe it because you have passed in several cycles. Yeah, it has raised a lot in value, but it has had several crashes every more or less 4 years. That is the cycle, also related to the halving. So you really need to be a true believer on the technology. And like any investment, is also a kind of risk. So yeah, it's true, and it creates a kind of it can create a kind of unfair field for the other people. And I also agree with that part, and this is one of the reasons why I have other project that I've been researching for some time. That is okay, how we can make that people can gain economic tokens, because one important thing that Bitcoin brought to us was the notion, the abstraction of economic value. What is behind? What is the real value behind the currency? And basically, once again, we go into the fate, because Bitcoin has all these characteristics that make them be scarce, with a finite supply, with known rules. But you always also you need to have trust in the system to use it and to keep it in the value. So yeah, we can say that it will be unfair, because the first ones will have millions. There is a very common saying that there is more than 21 millionaires in the world, and there is only 21 million bitcoins. So there is less than one bitcoin for each millionaire. So in fact, it can. But the truth is that Bitcoin brought this distributed ledger technology and opened a lot of opportunities for people to transform their skills and their knowledge and produce economic value and be rewarded by that. Um,
So you mentioned the word trust, so not to get it confused with this idea of trustlessness, but trustlessness is something that surely shows up a lot in this discourse as well. The word trustless. Could you explain a little bit to my audience and myself what do you mean by that? Why do I not need trust, or what does it mean to be
no,
trustless, and how does that play
you
into it?
need the fact in here is that in this area, code is law. So in fact, this the, all the um, once again, going back to Bitcoin, the system is designed with the proper incentives and punishments in a way that all the participants are incentivized to act in a productive and collaborative way, instead of trying to abuse the network. So for it, we have three kind of big segments. We have the developers, the development team of Bit. Well, Bitcoin still nowadays is one another good thing that Bitcoin has is there is no CEO, there is no company behind, and this relates to the concept of decentralization that we also talk. Is not centralized in one organization, traditional organization. It was created by a person or a group of people with a pseudonym of Satoshi Nakamoto. That was it was part of the also from the CryptoPunks team. Nobody knows it. Going back to the trust, also we say is don't trust, verify. So you can verify by your own everything that happens, because um, unlike the existing financial system that you cannot monitor all the transactions that happen in Bitcoin and in this technology sector, all the transactions are public. Well, if we go into public, because there are also some private blockchains, but um, I won't consider them as really blockchain, the real concept that we should use it. But all the transactions are
Mm-hmm.
public, and you can monitor every transaction that can happen. And even for the case that Bitcoin, that's why we say don't trust, verify. You can run your own Bitcoin node to validate, to verify the transaction. So without using any third party, any other node, you can use your own Bitcoin node to verify the transactions. But like I was saying about the
Okay, this is a great jump off point. Berners Lee. So Berners Lee, the inventor of the web, or part of it,
yeah,
part of that early team of developers. He was recently saying that, pointing out to this exact thing as a problem in the blockchain. You don't have privacy because you don't have true privacy because everything is publicly available. All the information is public. And so, what about privacy as an important aspect?
well, is the transactions that are registered, all the addresses, the sender and receiver, but Bitcoin is pseudonymous. So you don't have your ID and name. For you to create a Bitcoin wallet, you don't need to do any KYC, any AML process. You don't need to provide any document, any real name. You just need to use the software, and then you generate your own private key and have the public key, and now associating with this private public cryptography with the traditional finance. The public key is like your bank account. is something that you share with another person that wants to send you some bitcoins. The private key is like your code, is your bank account, your PIN code. You never share it with nobody because is the only way that you guarantee that only you have access to your wallet and to your bitcoins. So is another thing that Bitcoin has that is better than the traditional system because when you have access to a bank account, you're not owner of that money. You have access to a bank account that has that money. In Bitcoin, you're the only one that
Right.
control access to your account. So, for instance, in the traditional finance, like it happened in Cyprus in the last debt crisis, people that have their money on the bank accounts, the government stole part of their money. In Bitcoin, if you are the one that have your coins stored on your private wallet and you have your own private key, you don't have that risk. So it's another.
But then you can do a lot of tax evasion, right? I mean, so or money laundering and things like that, right?
Yeah,
So I can see this is like,
the,
this is the conflict between the private and not private,
yeah,
right?
but that's the part
If you're
that, like
private,
I was saying, because it's pseudonymous, you don't have their ID, but what it happens and why um, what the regulators and the entities they are pushing is for KYC and AML. And so what it happens is because you need to use well, you don't need, but most people, you're not obliged. There are alternatives, but most people use on crypto on exchanges on ramps, basically to convert from fiat to crypto. And to create accounts in
mm,
there, you need to do KYC and AML. So they know who you are. They know the person that is responsible for that address, and then going to the blockchain, they can kind of backtrack and see, okay, what were the transactions done to this. There are some things like coin mixers that you can mix, so that is not that easy. There are also some privacy coins that guarantee other level of privacy and security. Um,
okay.
yeah, but related to the kind of criminal use and those things, well, the currency still most used and best used for any illegal activity is dollars in cash. It still is, it always is. And in fact, in the past, once again, like many technology was used for bad purposes. Crypto, especially Bitcoin, was used for illegal activities. But now with this implementation of KYC, AML that are monitoring the off ramps from crypto to fiat, it's not the smartest way to launder money or do any illegal activity on a system that all the transactions are registered and are public. So um, for sure, it's not the most of activity. It's not illegal.
So this tension remains. So this point that Berners Lee brings up, that it's not private, is a problem. At the same time, of course, if it were private, you could do tax evasion and money laundering. But it's always, this tension is kind of irresolvable. It's
Well,
not something you can actually.
let's once again is okay. Like all technology can be used for good or for bad. For
Yeah.
sure, crypto is not now with all this KYC, AML on exchanges because um, you still need to go still until Bitcoin is really has mass adoptions, or if you go in some specific place like El Salvador and some specific merchants that you can transact directly in Bitcoin, you still need, for most cases, you still need to convert from crypto from Bitcoin to fiat, to USD, to euros, to whatever. So, and that's at that point you are being monitored. So once again, is not the smartest way, is not the best way to do. Then it's a lot easier to have a bag of cash and then transmit that without nobody because there's no register of that, there's no transaction, it's not on an immutable ledger. Um, so is not the best way. For the privacy concerns, yes, if you are have a little bit more of technology literacy, there are ways for you to improve the privacy or even use some specific privacy coins. That's why, for instance, in the past, in the dark web, Bitcoin was very used. In the last years, is not the currency most used in that area. Is a privacy coin. So once again, but in fact, this gives power to the people and technology. You can monitor, you can try to manage and improve your privacy. Something that for sure you cannot have. And this relates for me with one of the biggest worries that is coming related to this technology, that is the central bank's digital currencies, because central banks digital currencies will permit the real big brother of your money. There are already some experiences. They are starting to talk. I think is for instance in Australia, that even your access to the internet will be depending on the kind of social score like it already exists in China. Yeah, well, one of the I think the biggest threats that this technology may bring and is the creation of CBDCs, basically the central bank's digital currencies that are already being developed by most central banks, because that will be a system that will create a kind of big brother. It's the dream of the surveillance system where all your transactions can be monitored and controlled. So you will only be able to transact where and when and with who the central banks and central regulators want. So you lose your liberty, your own financial liberty, your own economic liberty, that you are being losing with fiat money in a way that you are losing your economic value. But in this way, is really stealing your right to, how can I say, to transact, to interact with any person that you want. You will only
But
be
why would we allow this? Like in a democratic country, we probably wouldn't allow this, right? So is this a
because
worry that
no,
we?
because they will treat this like it's something very good. They will be very cheap for transactions that are main ways for them to implement. It's not the first time that central planners implement new monetary systems. So even in a worst case, there are some talks about the, well, especially in the COVID, about the possible debt jubilee. You can see what is the World Economic Forum, what Carl Schwab has been telling about in 2030. You will own nothing and you will be happy. This can be even the kind of universal basic income can be a kind of Trojan horse to implement these kind of things. Offering money like the US did, the kind of chopper money, but with a digital currency can be also a possible way to.
But wouldn't you need the require kind of a big conspiracy for this to work? I mean of the sort. I mean, I'm a bit skeptical because I used to work at the Federal Reserve Bank, and I didn't see any such
I'm
kind of
sorry for you that
conspiracy.
that being more. No, but it exists. Did you? In fact, the fiat, the monetary, the existing system is a scam. Because basically, they are stealing your economic value through time because they are devaluing your currency. Even when you were talking about that, the problem of the prices of properties. Yeah, one thing is the lack of, let's say, the scarcity of the resource, but another big fact is the, once again, devaluation of currency, because most of things is not they are getting costlier to produce with the technology and evolution. They are getting cheaper. The problem is that your currency is losing purchasing power because of the inflation. So um, the existing system is rigged. There is because if you look at the fractional reserve banking, how all these things work, we can see this is a giant big scam. In fact, it is.
But you can always invest in something that beats inflation, right? So that's kind of the idea there that you
But it's
can
more
just.
than that because you're already creating a gap. But for that, you need to know where to invest, how to invest. You're already creating a limitation. The quality of the money that people are using is not a very good quality because you are creating, again, if we go into information theory, you are creating entropy in the system and you are
But it's the
creating
same thing as like
information
so you
mismatch.
can. So what's the difference between investing in a house, investing in a Bitcoin? Both like the Bitcoin can go down, can go crash eventually. Could happen, right? So people talk about that as a potential. But and also that could be also true of land, but it's less likely because of this, well, of this natural limitation, right? So I guess this is this difference. So in Bitcoin, you have an artificially limited supply of it.
Mhm.
Whereas if you buy a house, if you buy a house for yourself to live in or whatever, the expectations that it will be worth more when you retire are reasonable because there's a limited supply, similar kind of thing as what's going on with Bitcoin in land, right? So it's kind of a
But
similar logic. And
it's not, you cannot relate to that because if you look in the past, maybe in the times of our grandparents, you need to look into the whole. Maybe with the average salary in maybe 5 years, 4 or 5 years, they will be able to buy a house. Nowadays, we cannot. So why was this
yeah,
discrepancy? And this was not related to
well, simply because
the
no
scarcity of
supply.
land.
No,
No,
it is.
no, it is not because it's not only houses. It's related to everything. All things are raising prices. What? Why?
Well,
Are
houses
things getting
are
costlier to
increasing.
produce? No, they are getting cheaper with technology. It's easier. It's cheaper to produce. The problem is the purchase power of your currency. You're always losing with fiat money. That's the
Well,
biggest
yeah,
problem.
we know that inflation is there. I mean, that's not new. So we've known about inflation, but the reason, I mean, it's in some ways on purpose, in a way, and in some ways that isn't necessarily. I mean, we've come to this, or at least the central banks have come to that. There's a certain acceptable level of inflation um, vis-a-vis economic growth, because you're going to have over time, you're going to have a little bit more dollars chasing the same amount of goods and services over time, which means that the money will lose in value over time at a certain rate. But if you take out some of the money, or if you make it worth more by the supply thing, then what you will have is you will actually have a contraction in the
But all
economy.
of
That's
that is
actually what's happening.
synthetical because that doesn't really affect because we need back to the basics. The quality of the money, the value behind the money is non-existent. So you cannot say the value just by manipulating the tax rates. Also, you create an unfair system for people because when
But
you
there is no
get
value
all,
behind the Bitcoin, right? Is
no,
it
no,
based on
the
something?
value depends how you can see it. For instance, it has been considered as a commodity. It's something that you invest electricity and equipment because the only way for you instead of you can either buy it or mine it. And to produce a Bitcoin, you need to invest X amount of money in both equipment and in electricity to produce that.
Mhm.
So, and the thing where I say, why would you want to use a Bitcoin? Because you were comparing a Bitcoin with a house,
Mhm.
but you were comparing a more kind of speculative investment asset because it's about, oh, it's valuing or developing. But no, when you buy a house because you want to live in it there. When you buy a Bitcoin, it's because you believe in the future the commerce will be digital and you want to be your own. You not only want to have sound money that you will know what will be the rules in that financial system in the next 40, 50, 60, whatever, at least as long as you're living. Um, and also you don't want to have a big brother and uber surveillance on that. You instead That's why um, it's the one of the biggest threats is CBDCs for human liberty, but can also be one of the biggest push or forces for mass adoption of Bitcoin and even maybe other privacy coins. Because when you start seeing that you cannot transact your because most of our money we don't receive we receive it through our bank accounts, so you have authorization to access an account that has some money.
Mhm.
In this, when they create CBDCs, they give, okay, you are the one in control of your account, but we can go there and steal your money whatever we want.
Mhm.
There are even some other things that are being discussed by the modern money theorists, that is putting expiration date on your money, so to force people to spend their money. Do you want to use a system like that? I don't want it. I
Mhm.
prefer Bitcoin
But
because I know
that
the rules in there.
but I mean, your choices are right now beyond that, those two choices. So your choices also include buying land, or buying a house,
But
or
it's not different because it's not a liquid asset. If you can
mm,
buy a house, you
okay,
cannot sell it immediately or buy it immediately like you
true,
can go with the
true, true.
Bitcoin.
There are fees involved, but there's
And
also fees involved. So what are the fees going on in terms of Bitcoins? How big of a problem are the fees? Because that's
well,
why
the
I think
the
immediately when you're
fee.
talking about houses, illiquidity of it,
Mhm.
it's also associated with
Well, it's still because for big value transactions, Bitcoin is very, very cheap. For you to buy a coffee, it's very expensive. Let me say that way. But this is related to the scalability thing and all the amount of transactions. But there are already some solutions being built, like the Lightning Network. So for you to do small transactions, it is too expensive for you, because maybe for you to pay a coffee, why do you need so much hashing power, a so secure network to do that simple transaction? Maybe it's not that a big risk. And maybe you don't need to register that on the Bitcoin blockchain. So, for instance, the Lightning Network, what they do is, for instance, you imagine your PayPal and Amazon. And so there are a lot of transactions between those two entities. Every one of them put X amount of Bitcoins in that Lightning channel. And with that, they can do how many transactions that want inside of that total amount, but they can do all those transactions. And only when they want, when they, for if they want, or when they close the channel, then the difference between those two wallets will be registered on the Bitcoin blockchain. That creates that you can almost, for no fees or very cheap fees, you can do transactions between entities. There are also other currencies, or cryptocurrencies, not Bitcoin, that you can transact with zero fees,
Yeah, but what
basically,
about,
and
okay,
almost
so
instantly.
for
But
transaction, but
you miss, for you to have that, you lose some
so
things. You lose some
so
decentralization, you lose some security. So there's a little bit trade-off between those
yeah,
things.
no, for sure. So this is like when you use it in the general sense. But what if, come back to the comparison with a house? So if I bought a house for $1 million, or I bought $1 million worth of Bitcoin. If I buy a house, it will take me a certain amount of time. So we know that buying Bitcoin could become almost, you can do it almost instantly. But say you took $1 million and you wanted to buy like what a house would cost, and forget about financing and all of that for now, for simplicity's sake.
Mhm.
If you were to wanted to invest this in Bitcoin, how much would your transaction cost be on that compared to a house?
Well, it will be a lot cheaper for sure than a house, but the specific amount, it will depend then on the amount of transactions on the network, what is the load. So the is not you cannot say every Bitcoin transaction has the same cost. It doesn't have. It's a dynamic variable related to the network condition at that moment. But for sure, it's a lot cheaper that buying or selling a house, those kind of high valuable assets are a lot costly, or even sending um, more than $1,000, maybe it's a lot is a lot cheaper do it in Bitcoin than to in most methods. Even though there are some new apps, some fintech that provide better things for those smaller values, but in general, it's cheaper. But in fact, it's not. It was one and still is one of the selling points that many Bitcoiners use. It is the low transaction fees, but it depends on the scenario. So you cannot use that speech for all the use cases. It's not. It's more. I think the value is really more about the trust, the transparency that exists in the system. Like I said, you are aware of the rules of the system before you enter it and while you are on it. While in the traditional finance, you don't know the rules. You may know,
Okay.
well, you may know the rules, more or less have some idea, but those rules can be rigged, and they are rigged by raising or lowering interest rates, and then the way the money is transferred. Because when we see, oh, okay, central banks, they lowered or raised interest rates, who benefits from that? Always the banks, commercial banks, because even like it was in eurozone, the rates were negative. So basically, and that's one big example of why the system should be wrong. The
But
existing
wait, if
system
the
is
real
not wrong,
rates are
outright.
negative, then the banks lose, right? Because
They are being paid, exactly. They are being paid to borrow money. So how can you really think this system is okay? For sure not. Yeah. So once again, knowing all this, the problem is, and going back to the conspiracy theories, why these things like how money works and these basic things are not taught at schools? Because it's a lot easier to manipulate uninformed people. Um, but before you didn't have an alternative to the traditional financial systems, but Bitcoin now you have. And so, if honestly, I think if you know enough, you will prefer Bitcoin. I'm not saying to put all your money in Bitcoin, no, but consider it at least as a backup plan for what may come in the future, and maybe not so far future.
So then I have another question. So what did Ethereum? So Ethereum is another currency, and it has brought to the table new, which is a smart contract, right? And could you
Okay.
could you chat a little bit about that? Like what compared to say Bitcoin, what you can now do that you weren't
Mhm.
able to do before?
Okay, so let's is one say is about the use case. There are many people. Oh, Bitcoin, Ethereum. Ethereum by itself, Ethereum is the network. The currency is Ether. The use case for Bitcoin is money, monetary system, transfer of money. Bitcoin it abstracts on a higher level to in order with smart contracts that are not as smart in fact because smart contracts are not the new for instance, every coffee machine has a kind of smart contract because a smart contract is a simple rule if then else. So it's not that smart. The difference is that with Ethereum, they abstract to create a virtual machine so that you can build decentralized system, so that you can put those rules in the decentralized system. So it's not on a single computer that you are using. It's not a centralized point. It's on a distributed network. And with that, you can start building decentralized apps. In fact, most of the innovation of this space has been built on top of Ethereum because Bitcoin use case is money, even though it can be used because, for instance, like the ERC20 that are token, you can use Ethereum to create new coins, but in fact, it's tokens. If we abstract the concept, is tokens. In Bitcoin, you can also use colored coins, but it's not. It was not designed for that. So Ethereum is a very use case for that, and all the concepts of the DeFi, decentralized finance, the non-fungible tokens, even the ICOs, because even though it was a bubble, and once again is related to the wrong usage by bad actors, ICOs were a very good innovation that happened on top of Ethereum. So Ethereum is a platform to build decentralized apps.
Okay, great. So it has contributed a bit more than just a ledger as well. So you can have
It
basic.
uses the ledger on a different way. Instead of storing value transactions of coins, it stores not computer. It stores states, transactions of states in the machine, the EVM.
That's definitely an important note there because yeah, how it uses the ledger. And so what I wanted to say, last then is I wanted to say, okay, what else can you do with this ledger other than currencies? So as we're moving from crypto, let's say, to the blockchain, I know that crypto is more or less not possible without the blockchain. It
Mhm.
requires the blockchain, but the other way may not be true. So you could probably build things with a ledger that doesn't require the use of any kind of currency. So could you tell us maybe a bit about some use cases in this, some things that are exciting to you, developments in the area of just blockchain without crypto?
True, and very important is most of the currencies that exist in the projects they don't require a token, a currency. It's just a way for the founders to raise some money, some other things, because most of the use cases you won't need that. So one of the advices that I give to people beyond the first one, that is not your keys, not your coins. Always store your coins in your own wallet and where you only have your private key, don't share it. Um, in this case, in most of the projects, look into the tokenomics of the project. Is it deflationary? Is it inflationary? Because there are no, Bitcoin was deflationary. For instance, Ethereum was not, but they added a kind of a burn mechanism to try to create a mechanism so it can also be devaluing currency depending on the usage of the system. Um, so most of, I would say that 98% maybe of the existing coins, I won't say the bad name, but it's scam coins, let's say like that. So most of the end will be important for the space. For in this case of FTX was also it's important. It is hard on the short term for many people and for the market, but it's important on the long term because it helps us clean some of these scam projects, and so that liquidity can be focused and money be focused on the true valuable projects. In terms of use cases, because that's how I look into these projects, for sure, Bitcoin number one. Ethereum, there are, and the concept of Ethereum is very good and it can be expanded to a lot more innovation, a lot more things. And that's why there are a lot of competitors of Ethereum. And even though in terms of performance and other features, many of them are better than Ethereum, Ethereum is still the one that has the most value on it, not only by the developers community, but also for the projects and all the tokens in there. Like Ethereum, this concept of building decentralized systems. Also, ChainLink. ChainLink is a Oracle system. Basically, if you want to put everything on the blockchain, even though I don't believe that everything should be on the blockchain, but many things will benefit of going to the blockchain. It will be important to have this kind of oracles to act as a proxy between the physical world and the digital world.
Could you break that down
Uh,
a little bit for me and the listeners? What is an oracle exactly, and how do you use it?
Oracle is a system that basically it collects information from the real world and transmit it into the digital world. Let's say in this case, oracles they are providing trusted. They are once again different than Bitcoin. They don't mind. They use proof of stake. There is a different incentive so that the information is reliable, the information that is being provided. But yeah, basically is to collect information from the real world and make it available on the digital world.
I see.
So that's one of the use cases. Even the concept of NFTs, and maybe now, since we are closing to make a connection with the metaverse that we also talked briefly in the beginning.
Yes.
Uh, Metaverse by itself is nothing new and is not something that came with crypto and Bitcoin. It happened. It was is something from the last century. It was even began was called the meta realms. It has been explored more in terms of AI. No, sorry, AR and VR. But in fact, what this distributed ledger technology can bring to this space, especially the transfer once again of economic value and also ownership of assets. Because, for instance, you can there's many kind of like GameFi. There, for instance, in a game where you can win a special sword or equipment or whatever, you can not only resell it to someone else, that you may even use it on other game, for instance, because it's transferable that asset between different, let's say, metaverses, or because I don't believe it will be one metaverse, will be different ones. Let's see the interoperability that will happen.
Yeah.
Um,
Well, this is
but
important
yeah,
for commerce more than even games. So I spoke with Ashish Kumar Singh on this exact topic, who has really tried to convince me that the metaverse is primarily, or should primarily be, in fact, a place of business rather than a place of, well, there are, of course, lots of gamers, but, since for example, I'm not a gamer, why would I be interested in the metaverse?
I don't agree. That's why, once again, I don't agree. It's more than that. It should be a place for interactions between agents. If we
Of
abstract to
any
that
kind,
level,
yeah.
maybe you don't know, but maybe it will be easier for you. Okay, with the existing interface, it's not that easy, but maybe if you could be interacting with an avatar with your friends or with your WhatsApp group or whatever group that you have on the metaverse, maybe it will be more interesting because you can have different kind of interactions, because maybe they can react to something that you say instead of just having the simple text. So if we abstract, it's not only business is one of the layers of the metaverse, but it's a lot more than that. Even education is very important and very engaging if using the metaverse. For instance, I'm doing a free massive open online course from University of Nicosia.
Uh-huh.
It's about NFTs and metaverse. I already did one about cryptocurrencies, and they are building their own metaverse so that students can engage, can have their own chat rooms, can interact. So is not only business. If we are looking just to the business layer, we are already filtering some of the possible benefits of the metaverse. We should abstract
But we're also
the
filtering
concept.
some costs, I think. So if we're getting into this the way that Facebook or Meta, as it calls it, envisions it, will bring, I think, a lot of social costs with it as well. In the case of the,
Depends.
yeah, but I mean,
Once again, it depends
yeah.
if you control your own data. That's the part. That's why it's important, and it's important the layers, because even if you go only for the business, if the user cannot control his own data, his own privacy, you're already losing part of your liberty. So that's why it's very important, and that's why, for me at least, I never believe it. That I don't think I will ever create an account on a Facebook metaverse, whatever it may be,
Mhm.
uh, because for me it will have to be something that I feel secure to be in there, and I know I won't be losing my liberty, because
Good.
once you go there, you may ask, and people that are not aware, they may provide too much information. They already provide, because if you see the way people use social networks, they provide too much information, because they are not aware that once you put it online, it's always there and can be used for good or for bad.
Okay, I fully agree with that. So, but I don't see too many use cases outside of business that are interesting for myself personally to be part of the metaverse, because I love being part of the real world. As I was telling Ashish Kumar Singh as well, and he came to this conclusion to say there is an importance of balance, and to make sure that we still value the real world and nature and the environment, in fact. So I can see a lot of problems with that, which brings me to this question, which is also another one that is related to what you always hear about when the discussion falls to the crypto and the blockchain, is this other concept of proof of stake versus proof of work. Could you tell me about the difference between the two and why that is an important aspect of this discussion?
Yeah, basically they use different incentives for to create a kind of game theory environments of the agents in the network. Proof of work basically is where you mine. Proof of work also builds on an old concept from IT. Proof of work was originally created to, or the algorithm on the base was originally created to avoid spam of emails. So basically, for you to be able to send an email, you needed to provide a kind of proof of work before that. So this way you could avoid the spamming. And it is used for Bitcoin for what? Because
What do you mean by proof of
it's
work in
what
this case? I still don't know what it exactly means from
it,
the.
it, it, it depends. On the case of Bitcoin, it's basically solving a puzzle, mathematical puzzle. You need to find a
Mhm.
specific number. So the miner in the network that finds that solves that puzzle first gives he grants the capability to add new transactions to the blockchain, to the Bitcoin blockchain, and that's why he is paid. He receives the new Mitten coins if it is done. But what in fact happens is, okay, it tries to add the transactions, and then that block goes to validators to see if the transactions agree with the consensus rules or not.
So, oh,
If
I
not,
see.
he is
So
punished.
what happens is that this goal of only of phasing out the printing of new crypto, of new Bitcoin in this case, is related to the difficulty of these puzzles. Is that right? So they become
No,
more difficult.
no, it's different. What happens is the difficulty is adjusted. So every more or less every because the target is to produce a block or to add a block every 10 minutes. So what it happens is if you produce a block in less than 10 minutes, the difficulty will have to be raised so that you can go with the 10 minutes. If you take too much time, you have to be lowered so that you can keep with 10 minutes. But no, in fact, the proof of work is what provides security in a way that it makes it harder for someone to gain the benefit of adding new coins. And you need to invest money and a lot of electricity nowadays to win that coin. So if you need to invest that when you have the authorization to build that, why would you try to fake the system? There's no incentive for you. You will not only lose the money because you invested, you won't have any money back, but also any coins that you may have in the past will devalue because you're hacking the system. And more than that, the validators won't let your block be added to the blockchain because it doesn't comply with the rules. So that's how it creates the incentive. In proof of stake, is basically the punishment. In the proof of stake is different. For you to be able to be a miner, you don't need that high complexity power because it's not only about being the first to find the solution for that puzzle. But in order for you to be a miner, you need first to allocate X amount of coins so that if you try to cheat the system, you will lose at least part or all of your coins that you put. It has a kind of, how can I say, a kind of collateral, let's say it. You need in order to be able. So this creates also already a kind of barrier for people to entry. But yeah, it's different. Of course, proof of work is very energy intensive. Proof of stake is less, but is also less decentralized than proof of work
So
because of this barrier.
yeah, I see. That makes sense. But then, of course, we have the environmental concerns. Why would you want to spend all of this energy that we really need to keep warm and to live our lives every day? Why would you want to spend that on essentially just printing money or increasing the money supply?
Not printing money, is printing sound money. Is quality is once again is going to the quality of money. Yes, it consumes a lot of electricity, but in fact, what most people don't know because it's not well communicated is a big part of the energy of consumption of Bitcoin comes from renewable energies. There are some cases even that let's say some traditional energy resources that, for instance, in gas, that when you consume it, when there is a combustion, there is at least some part of it that is being released to the air, and is being developed some solutions that you can use those things that otherwise will be wasted. You can use it to mine Bitcoin. But in fact, it's very energy intensive, but it is also one of the main forces for renewable energy because people are, and miners and people in this area are aware of this. Also, even in the market, there is a kind of premium for what is considered Bitcoin green. Uh, Mined with renewable energies, you can sell those bitcoins with a premium compared to the normal price of Bitcoin.
Mhm.
Um, so there is some concerns, but in fact,
But this comes down to
for
storage,
this,
right? So if we could store this energy instead, so the same this so the same amount of energy, right,
uh,
that is consumed by Bitcoin could also be consumed by doing something right now that we're doing with fossil fuels. And so instead, so basically what I'm saying is you could use that same renewable, and so it's just using renewable energy doesn't mean that it's now free, right? Or that it's in a sense,
no, it's not free,
environmentally
but it's
good.
driving innovation. Is once again, it's driving innovation, it's creating force for innovation in that area. But in fact, if we go into that discussion, there is a lot of other systems, other things that waste energy, doing less, how can I say, less beneficial things. For instance, the traditional financial system wastes a lot of energy to do provide a terrible financial, well, terrible for most, for the 99, maybe awesome for the 1%.
But they use a lot of
Um,
energy. Why? They don't have this proof of work, right?
because if you go, well, don't forget, you need to consider all the computers, all the systems that all the not only the central banks, all the retail banks, everything that is associated to that is a lot of energy also. But it's not about the thing is you need to look when you look into energy is okay. What is the output? I'm investing this amount of energy. What is the output I'm having for this
Hmm.
from this?
Sure.
And in fact, the people that invest because it's not cheap to mine Bitcoin, but in fact, Bitcoin network is the most secure and the most powerful network in the world, most powerful computer in the world. Um, we can see is okay. Is one thing they also discussed with some friends. There are some projects trying to do this. Is okay. So we understand that we need to have very high security, but why can't we try to use that computational power to do more useful to
Yes,
process more useful information?
yes.
In fact, in the case of Bitcoin, was not designed for that. In Bitcoin, um, the processing is in terms of hashes, not in terms of bytes, for instance.
Hmm.
But there are other distributed ledger systems that are trying to provide a solution for that, so that at least part of the processing capacity of the proof of work can be used to process other, let's say, medical information, other
Hmm.
science related information. So yeah, in fact, it's something that people are aware, but we go back again.
So proof of stake
What
is
is the
not the
outcome?
solution either, you say, because it.
Uh, the thing is, for me, I trust for sure. I prefer for a use case, money as use case, and for all the security, Bitcoin is Bitcoin, and I'm for proof of work. I prefer because it's the one that gives you more trust and more security to the network for sure. But I think there is space also for proof of stake and other thing like delegated proof of stake, that is a variation from proof of stake. There can be some use cases that can be useful, because otherwise, one thing is okay, proof of work for a Bitcoin, other thing is proof of work for all the distributed ledger network. No, that will be completely waste of energy. That I would agree. But I think, and once again, is the innovation process. There are other kind of because we are talking proof of work, proof of stake, but there are also other algorithms, proof of evidence, proof of other. There are other things that are being built. There are innovations being built to create alternatives for this consensus mechanism.
Ethereum
As
is
I saw.
changing to proof of stake. Is that correct?
Yeah, it's in the middle of a fork. Well, Ethereum, it's like I said, it's a very good use case, but Ethereum has some of the fundamentals behind Bitcoin that Ethereum doesn't have. Because, for instance, Ethereum, this is the existing Ethereum is not the original Ethereum. It's not the original blockchain itself. The original is Ethereum Classic, but there was a case of a DAO that. Well, there was a scam project, and it was decided to um, retrace all those illegal transactions so that the scammer didn't get the money. But what happened? Okay, you change, you go back, your ledger is not immutable anymore like the Bitcoin is. So what happened was a fork. So there is Ethereum and Ethereum Classic. Um, yeah, but Ethereum now is moving also to proof of stake. For me, once in that part, I just I don't honestly. I don't trust that much. If you go back to the basics, you cannot trust as much as the other is because it adds another kind of centralization. Even in because even the decentralization, depending on the perspectives, you have different levels. Even Bitcoin, that is the most decentralized of all of them, but it still has some points of centralization. For instance, most of the mining power, the hashing power, is on Asian countries, or used to be. So if we go into that, there is even some kind of decentralization. So it's a kind of
China disallowed
things
it,
that we
right?
need to
Did they
know.
not change a law against that?
Well, China is a little bit more than that. They disallowed, they blocked. We even make fun. China already made illegal, I don't know how many hundred times Bitcoin, but in fact they use it. They are aware of the importance. And what it happens, I think it was last year or 2 years ago, there was many of the Chinese miners, not the small ones, but there are some ones that even mine and they are related to the Chinese state. What they did was the government tried to pass the message they were banning, but what they did was those companies open new companies in the US and pass their mining operations in there. So they can benefit of not only not using their own Chinese energy, but they are not emitting carbon uh, dioxide. So the carbon quotes, the carbon credits. So, and but I'm talking about the biggest, more Chinese government related ones. But yeah, it happened. But they are aware of the importance, and they know. Also, you cannot completely ban Bitcoin from your country. You can take your country out of Bitcoin, but you cannot take Bitcoin out of your country. That's the importance of decentralization, and that everybody can have their own Bitcoin node, and unless they go after everybody and try to put in jail everybody that has a Bitcoin node.
Mm.
They cannot. Even if they close in China, there are nodes all around the world, so you cannot stop the network. The biggest threat for me that I see maybe is quantum computing. That, in fact, I think maybe because once you have quantum computing, you can break the cryptography behind the network, and in that case, all the principles, all the rules lose their value, lose the trust.
Oh, so once that happens, Bitcoin becomes useless and completely
Well, the truth that because like I said is I enjoy like very much Bitcoin, but I know we should be aware of what will be the risks of it. What will what we normally think is, in fact, quantum computing is a very useful weapon, especially nowadays that many wars are done in a more technological way. So a country that will have that power probably won't use it for to attack Bitcoin. They will probably use for with other purposes. And the other thing is, okay, once because almost all technology they first were military, then they were passed to the civil society. Once this start to pass to the quantum starts to come to the rest of the humans, we can start to use quantum processors adapted for the Bitcoin, but we can start using it also to protect the Bitcoin network.
Oh, I see.
And even for that, there are some projects that are being built, but not on top of Ethereum, but separated currencies that are already trying to put algorithms and mechanisms to protect from quantum computing. And also for Bitcoin, there are some discussions about possible improvements on the elliptic curve and other things that they are using so
Interesting.
that can protect from quantum computing. But yeah, for me, I think is the biggest threat.
Yeah, I appreciate that explanation. This is, I think, quite unique perspective on the quantum side because that I haven't even thought about this before. But of course, yeah, if you have quantum computing, cryptography will become sort of useless suddenly. If it would be available to me tomorrow or to us tomorrow, whoever makes real quantum computing available to everyone, yeah, if that happens really quickly, it could be that cryptocurrencies will be useless, right? At that moment, unless they themselves adopt it
As
quickly.
not only the cryptocurrencies, don't forget that almost all IT systems will be useful. Because
Useless, yeah.
useful, no, all come to useless because all the encryption will be unsafe. There are already some algorithms being worked for this because this is a concern not for Bitcoin. This was a concern even before, not only to Bitcoin.
Hmm.
So it's a general IT cybersecurity, let's say, kind of problem.
Yeah.
But yeah, but cryptocurrencies for sure. There is one, at least that I know from. It's not David Shaw. I'm forgetting now the name of the person, but was also one of the people that created some of the inventions used by Bitcoin that is working on a project to deal with that. But yeah, most of it cryptocurrency because the cryptography won't be secure anymore. But this is a general IT problem, not only for
Right.
crypto.
Makes sense. Makes sense. Well, this is pretty much, we covered quite a variety of topics here that are all related. And yeah, I guess that's pretty much it for me in terms of the questions that I have. However, my audience might have questions for you, and how would they find you?
Uh, well, can I say, I'm a kind of once again a privacy guy, so I don't use social networks.
I see.
Um, Even in yeah, I have my Twitter account, but I'm not that proactive in there. Um, so honestly, I don't see any communication channel I might share it.
Well, great. I'll send the links of the courses that you're taking, underneath
Okay.
the in the comment section, and it was been very great. I think you've helped me a great deal understand more about what the these technologies are and how they connect together. I appreciate that greatly, and I guess that was good for an episode. Thank you very much.
This show is published every Wednesday at 5 a.m. New York time, 2 a.m. in Los Angeles, 10 a.m. in London. This podcast is published on YouTube in video format and in audio format on all major podcasting platforms, including Spotify, Amazon Music, Google Podcasts, and many others. Please subscribe now so that you don't miss any episodes, and like a video that you like, and give us a thumbs down if you don't like something. In any case, please leave us messages and let us know what you like and what you don't like so that we can improve the show. Next week, I will be meeting with Olivia Gamblin, and I will be discussing with her her own conception of virtue ethics and as she applies it to AI.
We have different types of intelligence, and one of the types of intelligence that we have as people is actually moral, ethical intelligence, and this is our ability to sense and feel, well, both emotions, but also sense morals, so the difference between right and wrong, good and bad. Our intelligence in being able to understand this dichotomy that exists in life, that's what is essentially our ethical intelligence.